Okay, so seasonal analysis, what it is. Okay, if today you did not really trade the stock market before, you probably would not come across this method. Okay, because seasonal is very good. I mean, very accurate for the stock market. But can we apply into the FX market? You can. Okay, just that there's a lot more factors that's affecting the FX pair. So usually when we talk about seasonal, we are looking at the stock. Okay, but today I'll share with you that both can be applied, because we don't just blindly use the seasonal analysis, right? We combine technical with seasonal. Okay, so what is seasonal is again also about identifying pattern, but this pattern that we're looking at is slightly different from the technical. Okay, because technical is a visual pattern, seasonal is a data pattern, right? So you don't look at chart, you just look at data, statistics. Okay, so over here what we want to look out for is based on historical stats, is there a pattern that we can recognize that tends to repeat itself over and over and over again? And if it does, we want to use that data to help us to make a decision moving forward. Okay, so that's the idea of seasonal analysis. Okay, so to give you some example of what I meant by stats, right? So this one here, we'll just share an example on the S&P first, right? The stock market, the indices. Okay, so S&P. So from July to October, so some of the data here you can see, right? We took 50 years of data, okay, between July the 17th to October 26th, which is the period we are in right now. Okay, so if those of you who are trading the S&P, whether is it the indices or you're investing into it or you're looking at the CFD, this matters to you. Okay, and this is how we analyze the data. Okay, so for the past 50 years between this period, July to October, there is 26 times the S&P rallied, and there's 24 times the S&P dropped, which means, you know, during this period, there's a good 50-50 chance on rallying and dropping. Okay, so it's anyone's best guess, right? There is no real advantage for you. Okay, whether to buy or sell, not clear, because it's 50-50, right? The probability is half. However, the next statistic here is very interesting. Okay, though it's about 50-50, but the average return during this period of time is negative 5.67. What does this mean? It means that for the past 50 years, right? If every year between this period you go and sell the S&P, okay, your average drop every year is about 5.67%, which means if you sell it, of course, you make money by about 5.67%, okay, on the sell trade. Okay, now there are some years that rally, right? That's 26 times the market rally. But if you consistently do it, okay, of course, this is not a very high probability, but just based on, you know, half of the time you win, half of the time you lose, because 50-50, okay? But if you do it consistently every year during this period of time, you go and sell the S&P, there's an average return of 5.67%. Okay, so some years you win, some years you lose, but if you average out, you actually make money. Okay, and this is where the stats comes in to support and give you more information to make that trading decision. Okay, so the biggest dip, of course, was in 2008. That dropped about 32%, which is where you can see why the average return was about 5.67. Okay, because some years you lose money, some years you win, but when you win, the biggest win was 32. Okay, so that actually kind of averages out as well. Okay, so this is what we mean by seasonal data. Okay, it's based on statistics, and when you have this information at your hand, how you use it becomes very crucial. Okay, so give you some example, right? I applied this into my FX trade as well. Okay, this is quite recent. You can see over here, we exited this trade just late June. Okay, so I'll show you all the way until like the recent trade that we just exited this week. Okay, so this is euro dollar, Okay, so again, add in the seasonal idea here is that between June, 7th of June to 26th of June, which is basically the month of June, okay, euro dollar has a good chance of falling, okay, because based on the past 10 years, there's 80% probability euro dollar would drop during June. Okay, so what does this 80% mean? It means that for the past 10 years, okay, up to 2020, for the past 10 years, there are 8 years euro dollar drop in June and 2 years euro dollar rally. Okay, so with that statistics, in 2021, this year, during June, which direction would I be focusing more? Obviously, I would want to focus on the sell, right? Okay, because during this period, there's a high chance it will drop. Okay, but we don't just blindly sell, right? You then want to add in the technical patterns that we talk about as well. Okay, but you can see here, my trade is almost to date, right? So you can see I entered at 8th of June, which is one day after that, and I exited at 22nd of June, okay, which is like a few days before that, right? Because I also add in the technical, not just follow blindly like that, right? We add in the T, okay, the technical side of things. Okay, show you another one. This is also quite recent in dollar yen. Okay, so same thing, right? I think you should be very clear with how to read the statistics right now. 27th of June to 5th of July. Okay, so basically that couple of days, okay, the direction of dollar yen is buy, and we have a good 90% chance. So same thing, right? We'll look at the buy during this period of time and add in a little bit of technical. Okay, that's how you can see we made a good about 50 pips. Okay, so we enter about 110.82 and then exit somewhere around 111.45. Okay, another one very, very recent as well, 29th June to 9th of July. So just a couple of days. Okay, about 2 weeks of trading. Okay, same thing over here. We look at the sell, right? So idea again, 30th of June we entered, we exited at 3rd of July, right? A little bit earlier, okay, because we manage this trades here with the technical. Okay, so I want you to see how we combine the seasonal to give us that window of period, that's the timing, and then you add in the technical portion to increase the probability of winning. Okay, so dollar CAD, this is very, very recent. Okay, you can see we are in this season, right? End of July to 8th of August. Right now, today, as we are sharing, is 4th of August. Okay, so we are still in that period. I just got out this trade. Okay, why? Because we manage our stops, right? You can see it's a trailing stop, and basically we made a good about 50 pips or so, right? So that's the idea of it. But let me show you a little bit how we combine it with technical on this, right? So let me show you, the idea is the date here, right? So that gives us your window, the time for you to focus on this direction called buy, okay? And then we go to the technical chart on dollar CAD, okay? And this is where I enter, right? You can see adding on to the technical, okay? Can you recognize this pattern? Impulse correction, okay? And then a simple entry will do, breakout. Okay, this white line is where I got in. Can you see here? 1.2475, right? That's where the entry is, right? 1.2475. And of course, with this, okay, what happened is price just keep going up and then we just trail our stop loss, right? You add the stop loss here, it goes higher, you add the stop loss here, it goes higher, you add the stop loss here, and then it came down, it tagged us out at the stop loss. Okay, so of course, we didn't manage to capitalize on the full move, but it's still a solid one, right? I wouldn't complain about it. So then we exited here, and then you can see the price that we exited, 1.2525. Okay, so that's how I want you to be able to see the technical give you the direction as well, right? Impulse correction, you look for an upside, and then the seasonal data tell us this is the window. Look out for it. Okay, so that's how we combine T plus S. Okay, that's the breakout. Okay, and then of course that's the trailing stop. Okay, now can this apply to stocks market, right? Today doesn't matter, you trade FX, you trade commodities, you trade the stock market. I want to show you I apply for them, right? Basically all of it. Okay, so this is a company. I'm not sure how many are familiar with some of the stock side. Okay, the ticker symbol of this company is LLY. It's listed in US. Okay, and this is the recent trade here. So to show you, 13 June to 28th of July, direction is buy, the probability is 90%, and then this is how we executed it, right? We entered on 14th of July. Okay, you can see over here 1 day after that, and then we exited this trade somewhere around 9/29. Okay, so this one was taken at the end of the season here, right? And this trade made about 10%. Okay, close to 10%. Not too bad, right? Okay, give you more example. Amazon, I think you guys are very familiar with it. Okay, recently, if you're following Amazon, there's a major drop. Okay, can timing and seasonality help you to prevent those, major drop? Possible. Okay, let me show you an example of Amazon. Okay, Amazon between mid-May, 18 May to end of July, which we just exited this trade not too far back. Okay, there is 100% probability, meaning past 10 years all the way until 2020, Amazon during this window of period has never failed to rally. And then if you add in 2021 this year, which just passed, it's also a winning one, right? So the stats continue to be 100% for the next, continue, right? 10 years, 10 years, 10 years is 200%. And why I want to also highlight Amazon here is because I want you to take note, right? The seasonal, the timing here is up to 28th of July. Okay, and if I show you the chart of Amazon, okay, 28th of July is somewhere around here. It gaps down after that. Okay, basically the next day it gaps, okay, to the downside, and from there the 28th of July price to where the low was on Amazon is a good 9.8% drop. Okay, so did we lose on this trade, or did we end up giving away all our profits? No, right? Because why? The season, the timing tell us, hey, you better exit. 28th of July is done. This window of period is done. The timing is done. Okay, better exit right now. Don't go and buy anymore, right? And what happened next is, of course, it dropped. Okay, so it also complements with, of course, the earnings release on Amazon, right? It meets its expectation, and therefore there's a sell-off. Okay, but we don't look at all this. We don't look at earnings. We basically focus T, technical plus seasonal. Okay, and this is something that I hope you can see how these two information, these two methods, when you combine them together, you don't need very, very complicated system to start trading the market. Okay, all you really need is to figure out the direction, okay, a method to do that, which is the TA side of things. Then you have the timing where we use the seasonal methodology. Okay, so I hope that's clear as of now. Okay, so let me give you some data here moving forward, okay, to kind of guide you a little bit. If you're interested in this, you can utilize all this information, okay, and see how it can help you in your trading. Okay, so S&P, which is very common, in indices that many traders trade. Okay, these are some of the dates that you want to look out for. Okay, so if you're looking to trade the S&P, then you might want to just screenshot, take a photo of this slide. Okay, this is based on a statistics probability of 70 to 80%. Okay, so these are some of the dates and the average return you want to take note of. Okay, so from now until October, there isn't any advantage. Okay, in other words, if you're looking to trade the S&P from now until October, don't go and trade it first. Okay, it's not going to benefit you. It's difficult. Okay, but from 27th of October onwards to 6th November, you can focus on the buy. Okay, 20th of November to 6th December, focus on the buy. Okay, and then from 14th December to 3rd January, focus on the buy. Okay, and based on past 10 years, this three window of period, this three timing has a good 70 to 80% accurate. Okay, and then what you do, you go to the technical chart, look for the pattern to allow you to buy. You combine them both, your chance of winning is very, very high. Right? FX side of things, these are the three currency pairs and the 3 dates window of period you want to focus on. Okay, so dollar yen, we are still within this period, you can see, okay, until 11th of August, which is next week. Okay, focus on the sell. Based on past 10 years, there's a good 80% chance. Okay, let me bring you to dollar yen and look at the chart, right? So you don't want to just anyhow sell, right? But you do realize that price is already falling. Okay, just to give you the perspective of it, right? 16th of July. Let's take a look where 16th of July is, right? Let me drop a vertical line. Okay, 16th of July is somewhere here. Okay, so definitely you can see, you suffer, there's a good profit and then you suffer some drawdown and then right now you're back in some good profits. Okay, so the idea again is you want to use technical to guide you a little bit. Don't just follow like that. Okay, because you can avoid unnecessary drawdown. Okay, so how, honestly, this one I don't have a trade, right? I didn't manage to get in because we don't have this impulse correction. Okay, I don't have a setup to go in, right? So I did not take this. But let's say, okay, from here, if let's say this forms a flag, then what do you have? You have the combination of impulse, correction, okay? And let's say, by then, the window period is still there, then you can look for the sell, okay? But this is one method, okay? I want you to know if some of you are looking at like maybe 30 minutes, 15 minute, right? You might see some setups that you can look to trade, okay? For example, okay, I don't do 30 minutes, but if you are, this is a valid one, impulse correction, your trade might be here, and then that's where you write it. Maybe some trailing stops, you take some partial profits off, things like that, okay? There are many ways to execute a trade, right? Today, I'm sharing you based on Elliott wave principle, impulse correction, okay? Of course, based on that, dollar yen don't have, right? Okay, so that's the idea of it. Dollar yen, okay. Dollar CAD, we have until 8th of August, which is next week, right? Somewhere around Tuesday and Wednesday. The direction is on the buy side, right? So this is actually the trade that I took and we got out with trailing stops, right? But just to show you, there is still an opportunity that you can capitalize on, right? You can see this is where we get in, this is where we got out. Right now, looking at this, there's a good chance, okay, that this might maybe form a flag here as well, okay, or maybe a smaller one, right? If you were to look at this, okay, maybe a crawl, okay. So the idea again, you want to combine that, okay. So if this happens as a crawl, then this pops. That's where you might get this trade here as well, okay. So hope that's clear, right? So you can actually focus on dollar CAD here as well, all the way until 8th of August for the direction to buy. Okay, last one here on the currency pair, you have the Aussie dollar. Okay, Aussie dollar is a little bit long in the window of time. You have 29th of July to 2nd of Sep, right? So if you take a look at Aussie dollar here, okay, yeah, this is looking nice, right, on a 1 hour time frame. Yeah, I think this would be great. Oh, something is moving as of now. Okay. Okay, give me a moment. I might want to just put in this order here on Aussie dollar, right? Since we are looking at it. Yeah, give me some time. Okay, for those of you who are listening, don't just jump in like that, okay? Because I've been monitoring Aussie dollar and I know this is a pair that I would like to trade. Okay, so let me take this now. Okay, give me some time. Let me enter this trade. Great. Okay, I'm in. Yeah. Okay. So the idea is why I'm looking to sell. Okay, maybe I'll walk you through a little bit, right? I actually entered at market price. Okay, so very straightforward. Seasonality direction is down. There's a good probability of 90%. Okay, so from 29th of July to 2nd of Sep, which is over here on the chart. Okay, let me drop. I actually have the line already. Okay, this is the white line. Okay, that's 2nd of Sep, which means from now until then, okay, whatever is going to happen here, I'll be very focused on the sell side. Okay, and of course, we talked about this pattern just now here as well, right? From a technical point of view. Okay, what do we have? We have this impulse, and then we have this flag. Okay, and a little bit of detail. Can you see where we are right now? Okay, we are actually at this top, right? So you can see we are at the top of the channel. Okay, so that's the reason why just now I just enter here at market price, because I'm seeing some rejection as of now. Okay, is this going to be 100%? Of course not. Okay, can it be a losing trade? Yeah, it can. Okay, but the probability is there, right? Because you have the timing, you have the seasonality, you have this pattern here that tells you likelihood is down, and then you have this top of the channel. Okay, so is it a risk worth taking in terms of this trade? Definitely. Okay, usually I don't have a straight TP here for this kind of trade, because we'll trail the stock, we'll trail the trade, we'll protect and manage it accordingly. And then you know, if let's say by then wherever the price is, we'll probably just exit, okay, wherever it is. Okay, so yeah, right, just wanted to show you how we can combine this. Okay, just so happened this is moving now, so I just took that trade. Okay, yeah, but Aussie dollar, you have ample time, right? Because the window of period is quite wide, right? August to September is a full month. Okay, so you can focus on that. Okay, yeah. So yeah, so this is the chart where I did on in the afternoon, right? I took it. Of course, you can see similarity to it, but that's, you know, this actually pushed a little bit higher, and that's where we saw it just now.